It's a natural phenomenon, just accept it. But in trading, it looks like this, okay? So we find a leg that would be clicking here and here. You can see that all of this right here belongs to one piece, okay? So if we'd like to know where this currency is going to pull back to, why will it have to be pulled back to? Because professional buyers won't buy at the top. Professional buyers will only buy at the bottom, all right? So they need to put a pullback in order to do that. And that's why we say that the pullback is our friend, all right? So when it does pull back, all right, it goes to the Fibonacci extensions up here, all right? This is not random. This happens over and over and over and over again in the market, okay? The market is not random, it's being manipulated. These are one of the tools that the big boys use to get where they're trying to go. If they need to go up here for whatever reason they've got, they want to go up here, the first thing they got to do is entice buyers in, all right? And there's a 50% or 0.500 Fibonacci here. Now, let me tell you that there is no such thing as a 0.500 Fibonacci, all right? But because the market overwhelmingly uses it, it was left in a Fibonacci retracement key. But there actually is no such thing as a 0.500. But here's how you need to think about it. It is a 0.500 is a 50% pullback, which is a 50% discount. And it is that discount that brings the buyers in, because buyers, professional buyers, will not buy at the top. Professional buyers will only buy at the bottom, all right? Now, these are targets which are mathematical values, which are called Fibonacci extensions, and the market goes right to them and right to them. Why? Because the market is being manipulated by the big boys, but it's being manipulated mathematically, okay? So there we go. So let's take a look and see fibs in ranges. Now, in our last lesson, we learned about trends and we learned about ranges, okay? And you know that the market ranges 70% of the time. So this is one of the most important things for you to learn right here. Because if the market only trends 30% of the time, 70% of the time, you're going to be in a range, and you need to be able to find the targets in there. And obviously, they are the math. All right. So fib trading in the box is a trade that you must master. In fact, it may be the most important trade, because we have days, weeks, and even months of sideways movements. And by the way, there is no indicator that teaches you how to trade in the box, and that is 70% of the time. And the reason for that is, when you're in a box, the turns are very quick. All right, so you go up to the top, you turn to the downside. You go to the bottom, you turn to the upside. You go to the top, turn to the downside. And it's continuous as long as they keep the box going, okay? Well, these turns up here, these turns are too quick for an indicator, with the exception of a MACD, which of course you know is not lagging. The MACD is the only indicator who can tell you where the turns are, okay? So, since indicators are lagging, they only tell you what has happened, not will happen. So in this little illustration of a box here, when the market is going up here, your indicator, if it's not a MACD, will be giving you a buy sign, and reality is you're going to be going down. So the information you have gathered is erroneous. It's not correct. Why? Because the market can only tell you what has happened. And what has happened is we're going up. But we're not going to stay going up. We're going to make the turn in a box, okay? So let's take a look here, and I got a big box up here, and there are the fibs. Now, I want you to just look at this and see, there's the fib, there's a fib, there's a fib, there's a fib, there's a fib, all right? Look at how the market trades from fib in a box, down to the fib, down to the fib, up to the top, down to the fib, down to the fib, back up to the top, down to the fib, down to the fib, down to the fib. Okay, now we're going to make the turn to the upside, up to the fib, up to the fib, up to the fib, up to the fib, up to the fib. And see, these pullbacks are what allow this to happen, because the pullback is your friend, all right? So as you look at that, can you actually say, gee, I wonder if they really trade fibs in a ranging market? Obviously they do, all right? So this is why you have to master this methodology right here, all right? So I'm going to do some fibs on a live chart. And by the way, our fast trackers learn 10 different ways to use fibs, not just the one or two that I'm going to show you here, all right? So let's go to a chart. All right, and we'll find some ranges. Well, we know that the euro dollar is ranging right now. Okay, so there we go. All right, so let me take these off real quick, and you'll see. All right, so see what we're trading in the box. See how quick these turns are? There's one candle up and one candle down. Your indicator, other than a MACD, is saying buy. And what do? They sell. Right here, your indicator says buy. What do? Sell. Your indicator says buy. What do? Sell. All right? Your indicator says sell. They buy. How did they buy? Well, here's what they did. They needed to keep the box in play, so they did an A, B, C. Made the turn to the downside, and now they go. So let's take a look and see if the market knew where these fibs are, okay? So I'm gonna go back in the past here, over here, and we're gonna see if the market knew where these numbers were, okay? So I'm going back, and I don't have anything that low. I can use this little move here for the top of it, but I won't be able to use it below there, but you'll just see it in a second here. All right, so we gotta move it from here to here. This all belongs to one piece right here, okay? See that? All right, now over here in the box, here we are in the box, notice how they are going to the fib, through that fib, right to that one, made the turn down to this one, put a wick down to this one, up to this one, back down to this one, down to this one, down to this one, up to this one, up to this one, up to this one, made the turn, down to this one, down to this one, down to this one, down to this one. Wow. I wonder if they're using those fibs. Of course they are, all right? So now, once we get in here, we don't have any fibs back here. That's why we use Fibonacci extensions. So let me put that on for you here. And now I'm gonna fib from the swing high here to this swing low. You can see this is all one leg, all right? Now, here's the pullback. The pullback went almost all the way to the 50%, right? And made the turn, right? Where did they go? To here and to here. See that? All right. All right, so now when they're coming back up, all right, are they going to go to the fibs? Let's go take a look. Now, to move to the upside, your indicator says you're going down, you're selling, and all of a sudden you get stopped out and you go, what happened? The broker stopped me out again. No, the broker didn't stop you out. All right, here we go. So we're going to put a Fibonacci retracement on this move to here. Why? Because the math for this move is going to come from this previous move to the downside. All right, so let's just go see if they knew where the numbers were. All right, so here we go. All right, so off the bottom, your indicator says sell, MACD says buy, and the professional traders buy it to here. All right, then we get a break, hook and go, and where do they go? Up to here. Then when they break here, where do they go? Right to there. When they break up here, where do they go? To there. Now we need a pullback. Why? Because we've run out of buyers. There are no buyers here because professional buyers won't buy at the top. Professional buyers will buy at the bottom. So down to the fib they go. Where do they go? Right to there, and finally up to the top. You see that? That's what they're doing. Day in and day out, that's what they're doing. All right, so when we come back down the other side, let's see, these fibs are now going to be, this move to the downside is now going to come from this move. So we remove the fibs here, all right, and we put the new fibs on from here to here, all right, and let's just see, all right, they make the turn. They run out of buyers, sellers, up they go. What do? They turn here because now there's enough room. Boom, there it is. Pull back again, little ABC, so they know that we're going down, and down they go, and they don't quite get there. So what do? A little ABC to make it happen there, all right? And you can see, here's another ABC. What do those ABCs tell you? We're gonna continue what we're already doing, all right? These are not random. You will see them over and over and over again in the market. They're not random. They're put in by the big boys who are manipulating the market, and 78% of everything you see on this chart is going to be from a big boy, all right? Now, obviously, you can tell, here we are, this is where we currently are, and our next move, or all of our moves to the downside are gonna be trade one, trade two, we'll run into the channel here, so they'll either go sideways or an ABC there, and if they come up here, then you get this trade again, and then this trade again, all right? And ultimately, we'll get to the bottom, and then we'll go to the top, unless we're trending, and if we're trending, they'll break it out, all right? But it's too early in the game to know if they're really trending, but they could be. See, this could be a 1, this could be a 2, looking for a 3, 4, 5. But we don't have that information yet. So what do? We trade it inside the box. Let's go over here. Let me look at the EJ here. Okay, EJ. Let me take this one off and we'll redo this one. All right. So we're going back over here. You can see this is a big box. Let me scrunch it down a little bit, and you can see big box. That's not trending. What do you mean it's not trending? It looks like it's trending, man. I could put a trend on there. This is what I would do. I would do this right here. See, I'm going to go do that. There's a trend. That's not a trend, right? That's not a trend. Or what most traders will do is they'll put it right along these candles and say, it's trending right in here. That's what's happening right there. And it's not. Those are channels, all right? So it's not trending because we have to have Elliott wave in play, and we'll learn that in a later lesson, all right? All right, so we're trading in a box, okay? So the box starts down here, and it goes all the way up to here, okay? So this move to the downside came off the math from this bottom right here to this top right here, right? This move here, the math comes from this move over here, all right? So you got to find their math. All of them are mathematicians. That's what they're doing, math. So swing low to the swing high, right there. All right. Now, let's see if they know where the numbers are. Well, they sure knew that one. They sure knew that one right there. They sure knew that one right there. They sure knew that one where they stopped. Blew right through this one and stopped dead right there. Okay, now we make the turn and we're doing the upside move. Your indicators say you're a seller and you get stopped out because your indicator cannot make that turn unless you're using a MACD. So now all we got to do is pick this up. And now the math is going to come from the up move, is going to come from this past down move, all right? So up they go, all right? They make the turn, where do they go? Right to there, right to there, right to there, right to there, and right to there. See that? Wow. All right, now we're going to make the turn down here. Okay, this is live. We're at where that we currently are right now. So what do I got to do? I just pick up this fib right here, and the math is going to come from this down move. Is going to come from this move. All right. Let's see if they know the numbers. Gee, they knew that one really well. Gee, they knew that one really well. All right. So you can see a pullback up in here gives us this trade, this trade, this trade, and this trade. See, it's not hard. There's no rocket science here. Come on. It just takes practice. Okay. So I think you can probably see that that's what's happening. Let's do a Fibonacci target. Okay, extension. All right. I'm going to go over here to a kind of a wild and woolly currency. Let's see what I want to do. Just do the pound Aussie. Pound Aussie is a rock and roller here. Okay. So here we don't have any fibs over in here. Right. So where are they going to go? Well, these movements are going to be from extensions, all right? So, and this one here, okay? So here's the first move, and there's the pullback. Let's just see if they go to the extensions. One right here, all right? The pullback goes to the 618, and where do they go? Right to here, right to there, and right to there, to the pip. Oh, man. See, it's not hard, folks. This is not hard, right? Traders make it way harder. They think that because they need an indicator to help them make a trade, all right? That's what you think you need, but you don't. What you need to know is what the market's trying to do and why, all right? So here's the next big move, all the way from here to here, all right? Now they hit the top of the channel. No buyer will buy at the top of a trend, I should say, so they pull it down. Where do they go? To the 50% right there. See, there's a wick comes straight down there and smacks it, and they immediately find buyers. So where are they going now? Well, they went up to this top, and then they went right to this 270 fib right there. Now, they're not going to go to these two up here. Why? Because they're at the top of the trend. And this is the end of a trend, which is a 1, 2, 3, 4, 5. See, what you need to know is what are they doing today, and why are they doing that? And then once you know that, you'll know where the next probable move is, okay? When they pull back right here, you know that the next probable move is up to the top, break the top, up to the 270, break the 270, up to the 618, all right? And of course, they only went to the 270. Why? Because the trend is there. They can't get up there because no professional buyer will buy up there. The dumb money will buy up there, but no professional trader will, all right? So there, that's how you use Fibonacci. Now, of course, you got to practice them and practice them and practice them. But it's not hard. It's not really hard. And remember, our fast trackers have 10 different ways to use Fibonacci's. 10 ways to find the math that the big boys are using, who are printing 78% of these candles. Okay,